The prospect of Nigeria's refineries alongside the Dangote Petroleum Refinery spending about $1.43 billion monthly. We're talking about $8.56 billion over 6 months to import 122,400,000 barrels of crude oil reveals a tangible and a tangle of economic, operational and policy challenges that could ripple across Nigeria's oil sector and beyond. Now, these figures stem from the need to achieve full operational capacity at a time when the Naira-for-crude policy with the Nigerian National Petroleum Company Limited hangs in limbo and the federal government's domestic crude supply obligation falters. For an oil-rich nation like Nigeria, this reliance on imports underscores a paradox. We're talking about abundant crude on the ground, but insufficient supply to fill its own refineries. So this morning we're joined by Temitope Kolade, who is a senior manager at Oil and Gas Power, Anderson, Nigeria. Thank you so much, Temitope, for joining us on the show.
Thanks, Robert Medicom. Good morning.
You're welcome. So when you saw the headline, Dangote Refinery alongside other refineries may import $1.4 billion worth of crude oil monthly, how did you feel? Was it something that you saw coming?
Well, indeed. Apparently, from all of the reviews we've done of the NNPC's financials, it's apparent that a couple of loans have been taken, forward contracts by the NNPC. And even when you then say, oh, yes, I agree that I'm going to be getting a lot from the local markets, that the NNPC would provide crude to Dangote, we know that that is not exactly sustainable for so long, especially considering all of the obligations that NNPC has towards those foreign lenders. So that's it. I don't think it's far from what we expected to happen.
I mean, we're talking about $8.56 billion of crude oil imports, 120 million barrels of crude oil, with the country fraught with forex issues, subsidy removal, the Naira is weak. I mean, what are the implications here?
Yeah, you just mentioned then the first thing is that, if we have to start looking for crude from outside Nigeria, we need to buy in USD. Apparently, when NNPC also says I'm stopping the Naira for crude, it means that Dangote needs to look for USD foreign currencies to get those foreign stock into Nigeria. It also means that there could be a need for importation in itself for those refined products if Dangote doesn't get it right. For instance, if you also think about it beyond Dangote, is the low, if you consider the modular refineries, they don't even have the muscle to get the foreign currencies sometimes, or the bargaining power is not so much because again, the quantity that they need is not that much, right? So it's even more painful for them. The modular refinery is trying to source their crude from outside Nigeria. So what it also then means is that we'll continue to look for more volumes of refined products from outside Nigeria if we're able to get the local industry working. And of course, inflation is something that could also stem from that fact that we are putting so much pressure on the locally available foreign exchange that we have.
Now, earlier on, you talked about, obligations of the NNPCL as regards crude supply. I mean, we're talking about forward contracts. We're talking about crude for loan swap deal and all that obligation. Was this something that the NNPCL didn't see coming when we knew that there was going to be the creation of a Dangote refinery with other modular refineries coming on board?
Well, I don't want to speak for the NNPCL, but I presume that the issue has always been about ramping up our production to a point where NNPCL, for instance, is able to accommodate some of these volumes that the Dangote and other modular refineries would require. But more importantly, you see that if you're able to get the production to go very high, then it would mean that, yeah, I could take care of all of these forward contracts that I have. The forward contracts are necessary or were deemed necessary at the time again because there was need for funds. It was to take care of what it was basically on behalf of the federal government or the federation altogether. So we may not have blamed them. They would say that, oh, it's because of financial sustainability issues for the country. Right. And the expectation would be that there will be a ramping up of production levels such that you're able to accommodate the obligations to these people and, of course, still take care of the local needs when they do come in.
Okay, so I mean, let's tie this around the domestic crude supply obligation that was actually necessitated by the PIA Act. It was meant to actually prioritize supply of crude oil to domestic refiners. Now, this would probably seem a violation of that particular act, don't you think?
Well, again, even when you want to ensure that you provide crude to to the domestic markets, the pricing is also an issue, which was a bit of a threatening issue at the beginning of the conversation with NNPC and Dangote at the time, when it was a case of, oh, yes, I want it at this price, I want it at this. So markets reflective measures have to also come in. The same Petroleum Industry Act also provides for certain conditions to ensure that whatever you're getting from the local sources, from the local producers, is also in line with benchmark prices across the world, because you don't also want to be worse off because you're selling to the domestic market. But that's not to say that there are no needs to provide to the local market. It only means that at the point where the NNPC is now really stretched, right? What are the alternatives? And I think that the conversations are still ongoing. From what I have seen and read, there are conversations with the regulators, the NUPRC in particular, to see how they will then probably be able to look at the forecast production from the various operators within the industry and see how they can meet the local demands. But the reality as we stand is that there is so much obligation out there that is a tough one, and the only way to move forward and everybody will probably be fine with the resolution is to ensure that productions are increased.
But then having to import fuel is different from importing crude. Does this mean that, the downstream sector where marketers who were expecting cheaper local fuel will now be faced with higher costs on procurement? And then one would even wonder how sustainable this will be.
Well, sustainability is tough to determine going forward. It's going to be a case of we see things move up and sometimes it comes down, right? One of the things that Dangote Refinery is also saying is that I'm selling some fuel oils, and that would mean that I'm going to be shutting down my FCCU units, the cracking units that produces the gasoline in a couple of months from now, specifically saying that by 1st of June, they're going to shut that down for maintenance purposes for 30 days. So the question is, do we even have enough inventory? So that would impact on the pricing. It would impact on the demands for the operators within the retail industry to import fuel into the country and be able to supply us. And the question would be whether Dangote has enough inventory to continue to supply those who lift petroleum products from its during that period. Otherwise, it would impact prices in the market. It could impact on how the operators within the downstream sector continue to get imported products and sell to us. And of course, they have to source for foreign currency to do that also. And again, it puts some pressure on our foreign exchange balance, and it will impact on price. It could impact on pricing. So it's a moving conversation. We'll never really have a time when we can say it's stable to the extent that we said we have come to a point where it's a free market.
I was going to talk about how it impacts pricing, but you mentioned it. But then let's look at how it impacts rather the Nigerian economy, cost of production, inflation. food costs, transportation costs. I mean, don't we understand that the price of oil, of crude oil in the international market is around $70 per barrel, but then Dangote and other refineries, they are into business of making money. And while we are subjected to these fluctuations, then it would affect all those parameters, the areas that I mentioned. But let's have an understanding of what Nigerians should be bracing up for.
Well, what should we be bracing up for? Some uncertainties, particularly, but if we were to do some forecast, I would think that the changes shouldn't be so impactful, right? At the moment, we've had the price of PMS in particular range between 800 plus and maybe 1,200 per liter, and we may not expect so much shift away from that in the coming days, to the extent that Dangote continues to operate within this market. After all, not expect that the business would stop at any point in time. I do not expect that there would be challenges to the business to the extent that it would pack up. Right? It's a growing concern, and what that means is that it will continue to look for. It would continue to source crude. Right? We also should remember that even before NNPC was providing some volume of crude to Dangote, it had started importing, right? So maybe not so much will change in terms of prices. I don't want to be a prophet of doom. I think that in terms of the price fluctuations, it shouldn't be so impactful that the cost of items within the market would also be very significantly impacted. So let's hope that Dangote in particular, that has become a very strong player in the market, would find ways around how it sources the imported crude at fair prices that will not that will not impact so much on the output price for the refined products.
I actually read a report where we've seen some filling stations increase the price of fuel by about 42 Naira, some by 20 Naira, and there's speculations that the price might go up back to around 1,000 Naira thereabout, depending on regions. But then, permit me to be cheeky here, even as we put this in proper perspective. Now, Dangote's petrol production, according to reports, have stalled. The Naira-based crude deal has stalled. Now, imports, we're looking around 154.22 million liters set to be looming as per March 2025 shipping data. Now, fuel prices, untethered from subsidies since 2023, could surge beyond current 950 Naira per liter, according to reports. So, should subsidy return, even for a short while, till all these issues are resolved?
Okay, I doubt this subsidy will return. I think we are past that conversation. I'm not even sure that the operators within the market would want it, right? Specifically the producers. The producers for Dangote, for the modular refineries, for instance, they probably don't want a situation where they go back cap in hand to the government and say, oh, we have these recoveries to make from you, because that's what it will turn out to be if subsidy were to return. We also know that subsidy has helped us to, the removal of subsidy has helped us to deal with certain issues around arbitrage, even though there could still be some arbitrage playing out in some quarters. But the monthly demand for the petroleum products in themselves have also reduced, particularly because of this issue of subsidy that has been dealt with in a sense. And again, that's the more reason why we now have a budget of 54 trillion naira, right? So if we were to bring subsidy back into the analysis, it turns around the entire appropriation bill of the government for the year in particular, and it has very fundamental implications for the economy. That's another conversation altogether. So I doubt that that would come back in. I think that the producers will not even want that to come in because they want some certainty around how they're able to recover their funds, and they don't want to wait for the government before they get those funds back when they sell their products.
Okay, so NUPRC was meant to come up with, probable solutions to the conundrum around priorities with supply of crude and, of course, other obligations. What options, Temisope, are there if there's going to be a win-win situation for all parties here?
Well, the win-win is probably to manage how much NNPC in particular is able to give in terms of meeting its obligations to the creditors. It could renegotiate terms if it were possible. And we never say never, right? Because you could have conversations and say, oh, okay, we've got to also agree some additional penalty for not paying as you ought to have paid in terms of how much volumes you should be giving to me on a monthly basis, right? And that could increase what's available for the domestic market. So there are conversations that I will think the NNPC will be having together with NUPRC to strike that deal to say, hey, we still want to meet local demands in particular. But more importantly, they might be looking at how much they can ramp up production as we see some fields, both brownfields and greenfields, coming into operation and production. And then they begin to say, oh, we can really give you so much more, and so we would have an incremental plan for Dangote or the other modular refineries over time, right? But those are strong conversations to have because, again, pricing will be looked at how much benefit stands for each party and well, what do we want to do in the long run? Who benefits the more? Which one also puts maybe the generality of Nigerians at a very fair position the most? So there are conversations to be had, and I would hope that, the NUPRC will be able to strike a deal with the NNPC and Dangote and other parties.
Well, interestingly, the depot owners in Nigeria condemned the sale of crude oil in Naira, suggesting that framework affects Nigeria's foreign exchange stability and deters foreign direct investment. I don't know if that argument sits well with you.
Well, again, if you think about it, every decision that we make has an implication, right? And it depends on how they see it, right? I'm not going to fault them 100% because they're looking at it in a particular direction, but we've got to balance issues. Yes, crude in Naira means that you're not going to get certain, foreign currencies, because you could have sold those in USD, in euros, or whatever, the foreign currencies, and earn them. So it limits how much foreign earnings that you have. But it also means that if you're not selling, you're going to have to source for the same foreign currencies to procure from outside of Nigeria. So, it's a case of chicken and egg. Which one do you want, right? You've got to. It's like you're in a cul-de-sac. You're in a place between you are in such a position where you are struggling which one to do, right? If we were to sell, to other people, and then you say you're looking for funds to buy the same, it becomes a problem. But let's think about it this way, that if you sell in Naira, you then have enough products to even export, and that gives you foreign currencies that you're even looking for, at least a portion of it. So I would think that it's basically the trade balance that we want at the long run, and whichever position gives us a better trade balance is what we should be pushing for. But again, you don't want to produce locally and then take it out of Nigeria and bring it back in as an imported item after all.
Well, it's a big issue for Nigeria, looking at all the sites now. But then, the NUPRC has come out to say that Nigeria has about 37.5 billion barrels of oil to be tapped, and it's available for over 70 years. But then the challenges are around extraction, around production, around refining. Well, We hope there's going to be some sort of solution to the issue in Nigeria's oil sector. Temitope Kolade, Senior Manager, Oil, Gas and Power at Anderson, Nigeria. Thank you so much for sharing your thoughts with us on the show.
Thanks for having me.